Hi there everyone, and welcome back to our channel. In today's video, we're going to talk about a powerful new rule that's changing the game for those wishing to retire early in 2026 or beyond. Let's talk about some of those changes with HSAs and marketplace plans and how this could affect your early retirement. In today's video, we'll cover what's changing for HSAs in 2026, how this creates a real financial advantage for retirees, MAGI and premium tax credits, the HSA catch-up contribution rule, HSA's triple tax advantage, and how you can utilize other healthcare tools like prescription pharmacy coupons as well as DPC. Stay tuned. There have been sweeping changes across the health insurance landscape that will affect those in 2026. Now, not all of these changes have been good, but there is certainly one good change on the horizon, and that has to do with HSAs. So starting in 2026, all bronze plans as well as catastrophic coverage plans will be HSA eligible regardless of their HDHP status. Previously, only plans meeting strict IRS HDHP requirements could be paired with an HSA. However, starting January 1st, every bronze and catastrophic plan on the ACA marketplace is treated as HSA compatible. This is part of the guidance under Notice 2026-05 from the IRS following the One Big Beautiful Bill Act. So why does this matter? Well, expanding HSA eligibility is really quite huge for those who are using a marketplace plan, especially for those who wish to retire early. Using an HSA can help you to lower your MAGI, and it's also a very powerful financial tool because of its triple tax advantage. We're going to talk about that in just a moment. Now first, let me give you a brief rundown of the two types of plans that are being affected by this new rule. Really, I want to talk about those bronze plans as well as catastrophic coverage plans. Bronze plans are one of the basic 4 metal tiers offered by marketplace plans. As a reminder, there are bronze, silver, gold, and platinum. Usually bronze plans have the lowest monthly premium because they have much higher cost sharing, meaning your coinsurance with a bronze plan is going to be more than that of a platinum plan, a gold plan, or a silver plan. Bronze plans traditionally have the lowest monthly premiums with higher deductibles but offer good catastrophic protection. And now in 2026, they will be HSA eligible. Then there's also catastrophic coverage plans. Now these types of plans are available on the marketplace, but usually there are strict requirements as to who is eligible. Usually you would have to be under 30 or apply for some type of hardship income exemption. These types of plans also have very low monthly premiums, but much higher out-of-pocket costs. There is that threshold there to protect you from major medical spending, and of course, with a marketplace catastrophic coverage plan, you have access to your PCP at least 3 times before you would have to meet that very, very high deductible. These types of plans will now also be HSA eligible. But wait, what exactly is an HSA, and why should you consider one? Well, an HSA is a health savings account. It's an account with your money in it, and the amount that you contribute is pre-tax. This is part of that triple tax advantage. So by contributing a certain amount towards your HSA, you lower your taxable income. This, of course, can help you when you file your taxes, but it also has to do with your MAGI, which is what the marketplace looks at when determining your eligibility for a premium tax credit. Your MAGI is your modified adjusted gross income. By contributing to an HSA, you lower your MAGI. Lowering your MAGI can make you eligible for a much, much larger premium tax credit. So not only would you save money when you file your taxes, you save money on your monthly premiums as well. Additionally, HSAs, as I said, are an account with your money in it, and that account is interest-bearing. It rolls over from year to year, and the interest is not taxed. Now you can use the funds in an HSA for qualified medical expenses, and the list is truly extremely long. If you have an HSA and you wish to utilize the funds in it, you'll have no problem doing so. One of the main things you can't use it for is paying your monthly premiums, but other than that, you can use it for a variety of medical expenses, even over-the-counter medications. Now if you hold on to your HSA until you turn 65, it can convert into a basic retirement account. However, that's not the most powerful way that you can use your HSA. HSAs are not only interest-bearing, but you can also invest a certain portion of them. And the earnings on those investments are not taxed. This is one of the reasons why it is such a very powerful financial tool, especially for those who are looking to retire early. Every year, the IRS sets maximum HSA contributions depending upon the type of plan that you choose. So in 2026, the maximum contribution for an individual with an individual plan is $4,400. And for those with a family plan, it's $8,750. However, there's also the HSA catch-up contribution limit. So if you are over the age of 55, you can actually contribute an additional $1,000. That means that based upon your age and the type of plan that you choose, you can really contribute to your HSA almost $10,000. And remember, that's pre-tax. That means that you are lowering your MAGI and taxable income by $10,000. Now that is huge when talking about premium tax credit eligibility. Remember, at the end of 2025, those enhanced premium tax subsidies, which were made available under the American Rescue Plan Act and the Inflation Reduction Act, are expiring. Now, premium tax credits will still be available. However, that subsidy cliff is returning. That means that many Americans who are now eligible for larger premium tax credits under those two acts will no longer be eligible, or would be eligible for a much, much smaller premium tax credit. Now, if you are able to lower your MAGI by almost $10,000, that is huge in your eligibility. You could go from paying thousands of dollars per month in premiums to hundreds of dollars per month, depending upon where that threshold falls. So contributing to an HSA could save you in more ways than one, and really rather significantly, because your eligibility for those premium tax credits can save you tens of thousands of dollars per year. Now, the types of plans that are HSA eligible are more of the bare bones plans. Bronze level plans, as I mentioned earlier, will have lower monthly premiums, however, much, much higher co-pays, co-insurance, cost sharing. So a bronze level plan breaks down to a 40-60 split, meaning when there's a co-insurance, usually for those bigger medical bills for hospital expenses, then your insurance carrier would pay 60% and you're left with a 40% co-insurance. Now that can be truly rather significant. Also, you'll likely notice that with bronze level plans, with those lower metal tier plans, usually the deductible is much higher. That can be thousands of dollars before your insurance begins to contribute to the cost share, and that really is rather significant. Now, that is not to say that you shouldn't consider the myriad of services offered prior to meeting the deductible. Remember, your more basic services, preventative care, that type of thing, will be covered, often with no copay, even prior to meeting the deductible. So it's not like you don't have any coverage. You'll have much of the preventative and much more basic coverage, and really prevention is key for many major medical illnesses. And then there's those catastrophic coverage plans as well. These are really just there designed to protect you should the worst happen. Now, with a marketplace catastrophic coverage plan, you will still have access to your PCP for 3 visits. However, after that, you would have to meet that very, very high deductible. Very often with a catastrophic coverage plan, when we're talking about that high deductible, it's the same as your out-of-pocket maximum. And that's thousands and thousands of dollars that you may or may not have. And somewhere in between could possibly be your medical needs. What about other access to your doctor, or even your prescription drugs? Well, there are ways that you may be able to work the system a little bit more in your favor by utilizing one of these more bare bones plans to have access to that HSA, but still having something else to protect you as well. And that's why I want to talk about DPC, which is direct primary care. So DPC is not actually health insurance. It's not something that we can assist you with in enrolling. However, it is an agreement between you and your doctor. And if you can find a doctor that offers such an agreement, then enrolling in a catastrophic coverage plan, in addition to some type of DPC agreement, could work out in your favor. Basically, you'll pay a monthly fee. It's not a monthly premium because it's not insurance, but you'll pay some type of monthly fee to have more direct access to your doctor. So in addition to those 3 PCP visits, this may cover you for things like more basic lab work, if you have a sore throat, a sinus infection, things that are perhaps not really preventative, that wouldn't really be covered prior to meeting that deductible. So if this is an agreement that your doctor offers, this could be something that you want to look into. However, you do still need some type of catastrophic coverage plan in place, because should you need to be hospitalized, and that's really where those really big bills come in, you need some type of protection there to help you with the larger medical bills. You also need to know how to save money on your prescription drugs. So some of these plans may have a separate deductible for your prescriptions, or it may be all wrapped in together. So it really depends upon the type of plan that you choose. If you do take prescriptions and you want to take advantage of an HSA, but your plan has a very high deductible, you don't want to have to meet that out of pocket before your prescriptions will be covered. So there are some alternatives you can explore there as well. For example, there's GoodRx, which compares prices at local pharmacies and offers coupons. Single Care, which is a similar discount tool with printable coupons. Needy Meds, which will help to find manufacturer and nonprofit programs for affordable drugs. RX Assist, which is a database of assistance programs. Also, some pharmacies, like Publix, may offer antibiotics for very low cost or even no cost. And then there are things like pharmaceutical assistance programs and state pharmaceutical assistance programs as well. So if you are going this route, make sure you have some type of plan in place for your prescription drug coverage as well. There are a myriad of different options available on the marketplace, and it can be rather confusing. And I will say that I've noticed that even though this ruling is supposed to take effect in 2026, not necessarily all the plans are calling out that they are HSA eligible. So it can be a little bit confusing. If you need our assistance, you can reach us in the comments below or at the number on the screen. We're licensed health insurance brokers, we're licensed nationwide, and there's absolutely no charge for our services. Now, there have been a tremendous amount of changes this year with regards to marketplace plans and health insurance in general. So please make sure to subscribe to stay up to date, because we do release these videos on a weekly basis. And of course, please make sure to like this video so we can get this information out there. All right, let's get back to it. So if you are planning to retire early, either in 2026 or beyond, here's some of those things that you need to take into consideration to make sure you're maximizing your retirement. You can utilize a bronze or catastrophic marketplace plan that's now HSA eligible. But make sure that this plan will still suit your needs, or it's going to end up costing you in the long run. Make sure to open up that HSA and contribute to the maximum limits. You can use that pre-tax money for deductibles and other qualified costs. Make sure you don't utilize your HSA for non-qualified medical expenses, or there will be a penalty. You can reduce your MAGI by maximizing your HSA and use prescription discounts for everyday savings, as well as possibly pairing your plan with DPC for stable primary care. And of course, make sure to work with a financial professional to make sure that you are maximizing your HSA investments. Now, if you have questions, you can reach us in the comments below or at the number on the screen. Of course, we hope that these tips will carry you over to Medicare, but if you want to learn more about Medicare now rather than later, I will put our All About Medicare playlist over here. Of course, if you have questions, you can reach us in the comments below at the number on the screen. We're licensed health insurance brokers, we're licensed nationwide, and there's absolutely no charge for our services. And before you go, don't forget to like and subscribe. We'll see you next time.